Hello and welcome to the Business Standards Morning Show. I'm Kanishka Gupta and let's have a look at the stories for the day.
What the world needs now is people who see healthcare a little bit differently. Because seeing a healthier world isn't far in the future. We're building it now. GE, building a world that works.
Automobile industry is trying hard to keep pace with the growing ambition of the Indian middle class, which is on a shopping spree after over 2 years of pandemic-led uncertainty. According to reports, some leading companies are planning to spend 30,000 crore rupees on capex to boost production in FY23. Clearly, they got the cue from the recent uptick in sales. In the passenger vehicle segment, utility vehicle sales have overtaken those of cars for the first time. But the two-wheeler segment is still struggling to make comeback, somewhat reflecting the rural distress. Our next report offers insight into this industry and the challenges it faces.
India's automobile sector, consisting of passenger vehicles, commercial vehicles, two-wheelers, three-wheelers and quadricycles, again ended the last financial year on a bleak note. Total dispatches from factories to dealerships declined 6% to 17.53 million units, marked by diverging performances among the segments. The sector's sales had peaked in 2018-19 when it sold 26.26 million units. India's two-wheeler segment was the worst hit by the pandemic, and it is still showing no signs of recovery. The segment reported its lowest wholesales in the last 10 years in FY22. Data from the Society of Indian Automobile Manufacturers shows. After falling almost 18% in FY20, two-wheeler sales dipped further by 13% in FY21 and another 11% last fiscal to 13.47 million units, the lowest since 2011-12. Two-wheeler dispatches are currently just 64% of the 2018-19 level, when the segment scaled a high of 21.18 million units. On the other hand, the cost of ownership of passenger vehicles and two-wheelers has also risen substantially following a surge in fuel prices, price hikes by manufacturers to cover BS6 costs, and costlier raw materials. The transition to BS6 norms from BS4 came into effect on April 1, 2020. This pushed vehicle prices across segments as manufacturers developed new engines that met the rigorous BS6 emission rules. In the year following the introduction of BS6 engines, the price of top models like Honda Activa and Hero Splendor and TVS Jupiter became costlier by 10 to 11,000 rupees. Meanwhile, passenger vehicle segment put up a strong show last year, with dispatches rising 13% to 3.07 million units. This segment has recovered to 91% of FY19 level. But this recovery was completely led by a stupendous growth in the sales of utility vehicles, given India is in the midst of an SUV boom. Sales of utility vehicles registered a 40% jump to 1.49 million units, while passenger car sales declined by 4.8% to 1.46 million units. India's automakers appear to have put the challenges of COVID-19 behind them, as sales surpassed 2019 levels in the month of May for major car makers like Maruti Suzuki, Hyundai, Tata Motors and Mahindra. Two-wheeler sales remained sluggish, but they benefited from some pent-up demand and wedding season in the first 2 months of the financial year. People returning to offices and reopening of educational institutions is also helping two-wheeler sales this year.
See, the growth momentum in the PV sales, which we saw last year, is seen continuing this year. In fact, growth could have been much higher last year, but for the chip shortage, which is continuing and got a bit extended because of the Russia-Ukraine crisis, with Ukraine supplying a bulk of the neon gas which goes into the chip manufacture. We're seeing demand for IT also continue, IT products, especially laptops, etc., and phones continues to be pretty strong. And the chip manufacturers' first preference is give it to the IT sector. There also we are expecting some improvement in availability from the second half of this year. So this year we are seeing pent-up demand continuing both in the rural as well as in the urban markets, and that's driven mainly by UVs. Now we have the affordable UVs also, which is eating into the share of the sedans as well as the small vehicles. Assuming we continue at 12 to 14% or approximately 13%, we will cross the all-time high of 33.8 lakh units, which we registered in FY19. That will be crossed. We should cross about 34 lakh units this year. The cost of ownership, if you see, of two-wheeler has gone up by about 35 to 40% in the last 4 years. This is due to regulations, including the BS6, which came in. The hike in the insurance premium and the necessity to take insurance premium for 5 years for newer vehicles. Of course, then the cost of the inputs also has gone up, especially last year as well as this year. Income levels in rural markets also got impacted. In fact, last year, unseasonal rains impacted rural markets, and that impacted rural incomes. And because of the pandemic, we have also had shutdown of offices, schools, and colleges in the past 2 years, which impacted some amount of urban demand, especially for scooters. This year, we are expecting that, assuming a normal year and no pandemic interruptions, we are expecting two-wheeler sales will register 5 to 6% growth.
While semiconductor shortage remains the major challenge for car makers, Maruti Suzuki chairman R.C. Bhargava has said the government's plan to make 6 airbags mandatory in passenger vehicles from October 1st will make small cars more expensive and drive out a chunk of potential buyers. Providing driving and front passenger airbags in all cars is already mandatory. Adding another 4 airbags will increase the cost by 17,600 rupees, according to auto market data provider JATO Dynamics. In some cases, the cost could be higher as companies will be required to make engineering changes to the car structure to accommodate the additional airbags. Buyers of entry-level cars are much more price sensitive compared to the bigger car segment. Meanwhile, the government also increased the third-party motor insurance premium for various categories of vehicles with effect from June 1st, which will jack up the insurance cost of cars and two-wheelers, making their on-road version more expensive. TVS Motor Company CEO K.N. Radhakrishnan said this will hamper the efforts of the industry to recover. Chrysal's Anuj Sethi says interest rates are still attractive despite the recent repo rate hike by RBI. Further, the reliance of two-wheeler buyers on financing is also coming down. From 70% pre-pandemic, less than 50% of new two-wheelers are purchased on EMIs, he added. On the other hand, a media report said on Thursday that India's top listed automotive and ancillary companies have earmarked 30,000 crore rupees for capital expenditure in FY23. Tata Motors this week signed an agreement to potentially buy Ford's plant in Gujarat Sanand as it looks to ramp up its production of electric vehicles, while Mahindra Group has committed 15,300 crore rupees for capex between FY22 and FY24. Last month, market leader Maruti Suzuki had announced a new factory in Haryana, the company's third in the state, entailing a total investment of 18,000 crore rupees.
Our benefit is at least 30 to 35% higher than the previous year, and it's been driven by 2 aspects. One is largely OEMs in the passenger vehicle space would account for bulk of this capex. Because that is where capacity is being added. However, in the two-wheeler and commercial vehicle space, there is enough capacity available. In the two-wheeler space in particular, I think the investments are being directed especially for the electric vehicles. And to some extent, that is also happening in the passenger vehicle space. That apart, we expect this growth momentum will continue in the coming years also because of commitments made by OEMs under the PLI scheme.
Chrysal Sethi says that order backlog for passenger vehicles caused by chip shortage last fiscal year is expected to contribute to this year's high growth. He says the backlog could be anywhere between 4 to 6 lakh vehicles. But this figure could be inflated because consumers tend to make multiple bookings with different companies and not all of it would translate into sales. Sethi believes that the actual number could be closer to 3 to 3.5 lakh. Nevertheless, PV sales could touch a new record this year. He also said that some amount of inventory buildup is required by dealers, which could help OEMs in dispatches. The normal inventory level with dealers is about 25 to 30 days, which has now come down to 12 to 15 days. For the two-wheeler segment, although the expected 5 to 6% growth this fiscal is not impressive, especially coming after 3 years of consecutive negative growth, it would still mark the beginning of a turnaround.
सब अच्छी दिख रही हैं यार, कौन सी खरीदूं?
ये तो वही बात हुई, 4000 शेयर्स लिस्टेड है, कौन सा लूं?
वो तो सबसे आसान है।
तुझे 5 पैसा नहीं पता?
अब तो सबको पता है। 5 पैसा पर है 4000 स्टॉक्स की रिसर्च, टेक्निकल टूल्स और इन्वेस्टमेंट आइडियाज। डाउनलोड 5 पैसा नाउ।
अब तो सबको पता है इन्वेस्टिंग मेड easy and rewarding with 5 पैसा. Investments in securities market are subject to market risks. Read all the related documents carefully before investing.
Pandemic had elbowed the automobile sector on a slow lane. But the last 2 years have seen hundreds of startups hitting the roads, and most of them are still on a fast lane, in between shedding some loads to stay leaner. And some of them are also going public to raise funds. But just before hitting the primary markets, the salaries of their CEOs are seeing curious jumps. Let us find out why.
The number of startups in India continues to swell with each passing day, and so do the number of unicorns. Till May this year, India had 100 unicorns with a total valuation of $332.7 billion. On Sunday, Prime Minister Narendra Modi said the Indian startup unicorns' average annual growth rate was higher than that in the United States, the United Kingdom, and other countries. Modi said that the startups continue to create value despite the pandemic-led slowdown. Meanwhile, on Thursday, Union Minister Jitendra Singh said startups will determine India's economy and that of the world too. Last week, logistics player Delivery became the 12th startup to list on the bourses since 2019. Even as foreign investors are tightening their purse strings and asking the startups to brace up for tough days ahead, a Business Standard analysis found that their key management made a killing as they took the startups towards IPO filings. Of the 12 startups analyzed by Business Standard, employee benefits, which includes salaries, bonuses, wages, and gratuity, increased 21.4% in the year of the filing of the red herring prospectus. The year before, the average increase in employee benefits was just 8.8%. However, the key management personnel and their relatives earned considerably more. The average remuneration for KMPs jumped 114.9% in the year of RHP filing, up from 70.3% a year earlier. The remuneration in this case does not include data on rents and other benefits accrued to the top management during this period. However, it does include short-term and long-term benefits and ESOP expenses. A look at the larger sample of 93 companies which filed their red herring prospectus for IPOs in the last year and a half also shows stark differences in the compensation. The average employee salary was up 10.9% across the board, while average key managerial personnel remuneration was 39.2% higher in the year of RHP filing. The gap in startups is thus higher than other companies. One reason for this is that startups tend to hire more personnel as they move closer to the IPO. And there's more of a need in these companies to align themselves with market-linked salaries and retain top talent. An earlier analysis of a sample of 76 companies from the Nifty 100 index by Business Standard had indicated that the gap between the compensation of top executives and the median employee was 184 times. Among sectors, the gap between CEO salary and median employee salary is distinct among pharmaceutical companies at 340 times in FY21, followed by automotive at 308 times and telecommunications at over 257 times. In contrast, banks have the least inequality with the median CEO compensation at 91 times the median employee salary. Other sectors with low CEO to median employee salary include insurance and cement at 105 times and the industrial at 150 times in FY21. There has been a similar increase in income gap between the top management and regular corporate employees in other countries as well. The average US CEO salary was 351 times a typical worker's salary in 2020, according to an August 2021 report from US-based think tank Economic Policy Institute. And it was closer to 307 times in 2019, according to authors Lawrence Michel and Jory Kandra in their report titled CEO Pay Has Skyrocketed 1,322% since 1978.
क्या हाल?
मत पूछ यार,
फिर से स्टॉक्स में फंस गया।
तो स्टॉक्स के साथ बॉन्ड्स, इंश्योरेंस, गोल्ड में बैलेंस कर।
इसमें बहुत तामझाम है।
तुझे 5 पैसा नहीं पता?
अब तो सबको पता है। 5 पैसा है ऑल इन वन अकाउंट। डाउनलोड 5 पैसा नाउ।
अब तो सबको पता है इन्वेस्टिंग मेड easy and rewarding with 5 पैसा. Investments in securities market are subject to market risks. Read all the related documents carefully before investing.
Global headwinds and the soaring inflation are pushing the startups against the wall. Retail inflation is highest in the last 8 years, while the wholesale inflation has hit the 3-decade high mark. On its part, the Reserve Bank of India is trying to bring it down. Governor Shaktikanta Das has signaled a rate hike next month. Markets too expect the central bank to continue on its rate hike path till the inflation beast is tamed. So, what all is priced in and what is not? Our next report takes a look at this.
With food and fuel prices going through the roof, economists expect the Reserve Bank of India to go for faster, steeper interest rate hikes over the next few months. As per a Reuters poll of economists, the repo rate could reach its terminal level early next year. It further projects the central bank to raise its key policy rate by at least 100 basis points over the next 4 MPC meetings, the first of which will be held next week between June 6 and 8. This hawkish sentiment gained currency after the RBI announced an out-of-policy repo rate hike of 40 BPS in May.
What we are in a phase is an interest rate adjustment where the interest rate needs to adjust from a crisis or a slump phase to an expansion phase, which is more or less about interest rate normalization. And to me, that interest rate normalization means that RBI will have to normalize repo rate, which was at 4% for a long period of time. The reverse repo was at 335, which should now move to in the band of 5.5% to 6%. Is the market pricing that? Some part of the market is definitely pricing that. The interest rate swap market, which is the non-funded part of the curve, that market is already pricing in RBI to move to 6% repo rate by October. So I think that pricing is more or less complete in my view, and I don't expect RBI to surprise more than what the OIS market is pricing. Having said that, the other tool which RBI will apply during this period of time is to withdraw liquidity. Like RBI injected liquidity during crisis period, this is a time when RBI should withdraw liquidity, and RBI therefore has increased CRR. And I suppose that in the next 3 to 6 months, they will continue to withdraw liquidity from the from the bond markets, effectively meaning that the spread which exists between various segments of the bond market, the corporate bonds, the GSEC, all those spreads are going to normalize. So while the rate expectation is in line with what RBI would broadly do, but I don't think the liquidity adjustment in the market has happened, and I see that to happen in the next 3 to 6 months time.
Surplus liquidity in the system is being withdrawn rapidly amid inflationary pressures. According to bankers, the increase in the cash reserve ratio to 4.5% since May 21 has sapped 87,000 crore rupees from the system. In addition, the RBI is selling dollars and sucking out rupee liquidity, resulting in excess liquidity coming down rapidly. According to the central bank's data, the daily liquidity absorption from the banking system was 2.96 trillion rupees on May 30. This was lower than 3.22 trillion rupees registered on May 20, a day before the CRR hike came into effect. Bankers believe the central bank may be moving towards reducing the liquidity surplus to 1.5% of NDTL. As far as next week's meeting is concerned, economists expect the RBI to raise repo rate anywhere between 35 to 50 BPS. They also expect the retail inflation projection to be revised upwards to a maximum of 6.9% for FY23. However, experts are divided on steps towards liquidity absorption. While bankers expect no hike in CRR, the economists expect yet another 50 BPS hike. Rahul Bajoria of Barclays, for instance, says that a further tightening in liquidity cannot be ruled out. We expect a 50 BPS increase in the cash reserve ratio, again to take the level to 5% in our base case. Indian economy is facing a dichotomy of surging prices and a good agricultural production outlook. Thus, it's getting increasingly difficult to predict the monetary policy action. Nonetheless, a rate hike in June is a no-brainer. But the markets will be eyeing RBI Governor Shaktikanta Das' comments on growth outlook, liquidity measures, and inflation projections. On Friday, India's services PMI data, the US jobs data, and other stock-specific action will guide the markets.
तुम इतना डर गए? अब क्या किया?
शेयर्स में ट्रेडिंग।
तुम्हें 5 पैसा नहीं पता?
ओए, अब तो सबको पता है। 5
5 पैसा पर मिलते हैं रिसर्च टूल्स, पोर्टफोलियो एनालिटिक्स और इन्वेस्टमेंट आइडियाज भी। डाउनलोड 5 पैसा नाउ।
अब तो सबको पता है, investing made easy and rewarding with 5 paisa. Investments in securities market are subject to market risks. Read all the related documents carefully before investing.
After the markets, let us move on to the sophisticated world of chip manufacturing. The world looks towards a clutch of companies including Intel and Samsung Electronics for semiconductors which go into smartphones, cars, computers, etc. And these companies turn to a Dutch firm for supply of ultra-advanced machines to make these chips. But chances are you may never have heard of it. Let us introduce you to this company whose machines use light beams to make narrow circuits on chips, which are now the backbone of the world economy. It is Europe's most valuable tech company. Its market cap has gone from $25 billion to $225 billion in a decade. And 8 months ago, it hit a lifetime high of over $350 billion. This Dutch company made almost $20 billion in net sales and over $6 billion in profits last year. Yet, the chances are you may not have heard about it. The company ASML Holdings describes itself as the most important tech company you have never heard of. And rightly so. ASML is one of the world's leading manufacturers of chip-making equipment. It designs and manufactures lithography machines, an essential component in manufacturing microchips which go into smartphones, data centers, personal computers, laptops, cars, and much more. ASML makes lithography systems used to create the circuitry of computer chips. Its lithography systems can be found in the factories of every major chip maker in the world. ASML's most advanced machines use a wavelength of light called EUV, which stands for Extreme Ultraviolet. The machine uses EUV light beams generated by lasers and focused by giant mirrors to lay out extraordinarily narrow circuits on slabs of silicon known as wafers. That in turn makes it possible to create faster and more powerful microprocessors, memory chips, and other advanced components which are critical for consumer electronics and military applications alike. A lithography system projects light through a blueprint of the pattern onto a photosensitive silicon wafer. After the pattern is printed, the system moves the wafer slightly and makes another copy on the wafer. This process is repeated until the wafer is covered in patterns, completing one layer of the wafer's chips. To make an entire microchip, this process is repeated layer after layer, stacking the patterns to create an integrated circuit. The simplest chips have around 40 layers, while the most complex can have over 150 layers. Only a few companies, including America's Intel, South Korea's Samsung Electronics, and Taiwan's TSMC, are currently capable of manufacturing the most sophisticated chips, and they have come to depend on ASML to make them. 11,000 of its 32,000 strong workforce is engaged in research and development. Since 2000, ASML has rapidly taken market share from Japanese competitors like Nikon and Canon, which now mainly focus on older technology. ASML controls more than 90% of the lithography market, and no competitor is attempting to build an EUV system, citing higher development cost. Amid a global chip shortage, the demand for ASML's systems is higher than its current production capacity. Last year, it sold 42 Extreme Ultraviolet or EUV systems, and this year it expects to ship 55 units. It is the only manufacturer of EUV systems that are used in making the world's fastest microprocessors. ASML says its job is to help the industry continue Moore's law. In 1965, Gordon Moore, one of the Intel's co-founder, observed that the number of transistors on a microchip was increasing rapidly, exponentially increasing the computing power while decreasing the cost of the chip. Moore predicted that the number of transistors would double every year for the next decade. In 1975, he revised the prediction to every 2 years. His prediction has proved to be true, and today's microchips contain tens of billions of transistors. ASML's EUV machine pushes Moore's law forward, and chip makers cannot produce leading-edge chips without it. Delivering just one of these takes 3 Boeing 747 cargo planes, 40 freight containers, and 20 trucks. The bus-sized machine comprises 100,000 parts, weighs nearly 200 tons, and costs around $150 million. A cutting-edge chip plant needs 9 to 18 of these machines, which are one of the biggest capital costs for chip makers. ASML's next iteration of the system, known as High-NA EUV machines, will be even larger and cost around $300 million each.
I'm backed by the nation's trusted bank, SBI, the banker to every Indian.
In 1984, when ASML was established, there were at least 10 big players in the lithography market. Now it is only ASML. That's all for today. We will be back with more news and analysis on our next episode. Stay tuned and thank you for watching. If you like this video, share it and subscribe to Business Standard. For more news, views and insights, log on to www.business-standard.com. Do also follow us on YouTube, Twitter, Facebook, Instagram, Telegram and LinkedIn.